Hello friends, interesting month. The most significant recent development is the United States decision to raise duties on Indian goods, imposing an additional 25% tariff on most exports, taking the total levy to 50% for the majority of items shipped to the US. Pharmaceuticals and electronics are exempt as of now. The move, tied to India's continued purchase of Russian oil, comes at a time when bilateral trade negotiation remains stalled, most likely over agricultural market access. These tariff announcements have hogged the limelight, making a lot of Indian equity investors anxious. However, amidst all this gloom, markets are ignoring some of the key positives. A. India's listed market exposure towards directly impacted sectors is limited. Only 2% of MSCI India's revenue come from goods export. B. The income tax cuts announced earlier this year, the cash doleouts schemes by different state governments, and pending wage revision of government employee put together are 2% of GDP. This should support the GDP growth, especially domestic consumption, going forward. C. Year till date, RBI has cut by 100 basis points. This, along with higher durable liquidity, should drive demand as transmission of lower interest rates takes shape. And finally, the above average monsoon this year after a good monsoon last year has brought about a reasonable buoyancy in rural economy and demand. Our portfolios are positioned to reflect our views of a cyclical uptick in the economy and corporate profitability. Drivers such as favorable monsoons, recent tax cuts, and low inflation support this view. Large caps stand out for their attractive valuations and earning visibility, while small cap allocation remains selective, focused on quality and delivery consistency. Multi-asset strategies continue to provide diversification benefits in the face of trade and policy uncertainty. While tariff-related uncertainty may drive near-term volatility, India's structural growth story, strong domestic demand, and disciplined portfolio positioning support a constructive outlook. Remaining focused on quality, diversification, and long-term discipline is key to navigating this phase. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.